Okay, good evening, everybody. How's everyone today? Uh, Kind of our pre-Labor Day holiday meeting. Um, I figured something happened overnight tonight. Um, we'd be in a situation where we'd be able to see um, action today. And so, behold, the market did go lower today, but we'll talk about that. So, hi, Everett. Hi, Mike. Everybody. So it's nice to see everybody here tonight, and go up there. So I hope it's tomorrow. The markets are closed. Europe is closing. Europe is open, and the futures are open in the stock market, but not the stock itself. Okay. So we'll go over some stuff today. Won't keep it real late as far as that goes, but we'll go from there, and we'll go from there. Okay. So substantial risk of loss trade commodity future options, past form, not indicative of future results. The opinions of the United receipt, not to take recommended buy or sell commodity future options based on petition Richard Wyckoff. That's our disclaimer, and we shall go forward from here. Okay. So let's take the S&P because I think the S&P is real interesting. Okay. We just had the monthly charts. Now it's not cooperating. Why is that? Why did we get a blank screen? Anybody know why we get a blank screen? What's going on? Is there Adobe? Hi, Chris. Good evening. I'm getting a blank screen on my quotes. And I don't know why that is. So, don't know why we're getting a blank screen. Never had that before. So let me get out of the CQG and then re-enter the mark. Re-enter. I don't know why. I've never seen it before. Not responding. Not sure. Is very strange. Let's make this. See what this does. Sorry about that. Hi, Chris. But I don't know why this is occurring. Tuesday we'll have our gold and silver talk, and then Wednesday we'll do our free stock night talk. But I'm trying to figure out why the CQG is not responding. So we'll get to that. We'll definitely get that. I'll redo that, and what we'll do in the meantime until I get it reloaded is maybe talk some stock wise. So this is the spiders, which is S&P, and I'm going to relog this on the CQG. Don't know why that was, but don't why that give me stock either. Okay. Q trader. It's giving me soccer. Why is that? Do we know why? Q trader. Baseball. What the heck? This is got hijacked or something. We'll get it. Okay, let me just start this. Anyway, so this is the Spider Daily Index, which is the S&P index, and this market to close. The markets are open tonight. Okay, so this market actually closed um, higher on Friday, and the volume was decent, indicating there's some demand that is going on, right? So what we see here is that the market has not gotten above the market in which we got this supply bar or the up thrust bar, okay? So one of the things that we get when the market is in a situation where the market has had selling in the background, buying has to oversell this particular selling in the background, okay? So you have not seen that yet. And hope we get our quotes back. And we have not seen that taking out yet. So what we have here, this is a very good example of a market that is a shorting of the downward thrust. Okay, here, let's go back a bit. We have a very large range bar here with good volume. Okay, a very good volume. The next bar, we have a market that has larger volume and a smaller range. Clearly, effort versus result in the market. Okay, in markets that are looking for some type of counter move, okay, this would be considered effort result red flag. This would be considered a situation in which the market will have some type of reactionary move the opposite way. What occurs during that time? It's the composite operator controlling the particular range of the market. So all the selling that's occurring to the downside by funds and or specs in both is being bought by the composite operator. Thus, the smaller range of the market to the downside. With all that volume, we should see a wider range than the bar before, even though larger volume, and we don't. That's effort versus result. That is a red flag, and we got the reverse upside direction. So the composite operator was buying what was being sold to him. Okay? Thus led to some type of small reactionary rally to the market. Okay? Now, we see the market moving up higher. The volume does not increase on the rally, indicating that demand is not really present in the market. So that means that if there's no demand after the selling that goes in the market, what can we expect to see? Some type of retest lower. Okay. So we get the retest. And the quality of the retest is very, very important. Okay. So we want to see the ranges have demand to the upside. We see the volume come in, indicating buying. Okay. So if you look at the volume over the last 3 days, the volume has continually increased and market goes higher. Usually, if you get demand, the demand will be first. Okay? In this case, you have the market increasing volume with a very similar range to the month before. Okay? Now, what we see is when the volume gets too high relative to the market, okay, what happens is that we see too much effort the amount of range of the cause being built. So, bottom line is, though, is that there's too much volume that's leaving the range. So even though the market closed fairly high, there's a lot of effort of volume for the market to go there. Okay? So this is probably one of the reasons why the market's. Yeah, I'm going to go to my other chart. I'm trying to get this thing done. Everett, my other. I'm trying to get my other quotes up. So I don't do this, but I'm trying to get my actual Q Trader quotes up. Yeah, I'm just kind of actually, be honest, kind of biding time to get the other one done. So, but we want to see the market really the volume get to the point. We want to see the volume. If the market goes up, let's say 10 points, at 100,000 shares, we want to see the market go up 10,000, 100,000 shares. If we tend to guess anything differently, we could run to a situation where the market now doesn't, effort versus result, doesn't match up. And if it doesn't match up, that's always a red flag in the market. It doesn't mean that the market becomes necessarily a sell in this case or a buy in this case, but it just means that the market is a situation where the market tends to be a little bit in a situation where we have to be at a point to where market was, okay? So we will see what the market does, but it's a problem that you get to the problem to see what the market actually gets up here. See if we get the volume that goes across theory-wise. Needs to absorb here or jump over the creek above those previous highs. Okay. Try to get this up for us. Oh, I was afraid of that. I was afraid of that. Okay. Shoot. Okay, let me put some quotes in here. Other charts we're gonna do, and I'll do this later. Okay, let's get back to this. go back to our daily. Okay, okay. So this is a daily S&P, and so 15-minute S&P. It's not daily S&P. Okay. So this is the S&P market-wise, and let's talk about what's going on with this market here. So we judge effort versus result in markets. Okay. Well, I'll just talk about a little bit, and we see high volume that occurs in the market on Thursday. Okay, high volume, but the range was not really wide relative to the volume. Okay, which kind of makes it a red flag because we should overcome this selling that's really in the background here and here. Right, so we need to really move above it and demand to take that out. Okay, so the volume comes in, and the market closed on its highs. But we really need to overcome that particular area. Well, Friday comes, and we actually had a report, the job report on Friday. Okay? What do we see? We see the market. We see the market. What? We see the market get to the point in which we see the market in a much smaller range. So the volume is maybe 60% of this, okay, 40% more, but the range is much smaller in the close in the middle. This indicates that there's selling that's occurring to keep that market in a small range, and thus today's break. Okay, so very important aspect of the market. Let's talk the market. Let's redo my quotes. And let's take this market from a standpoint of the market on Friday that happened. So even though you necessarily wouldn't go short this particular market, from a Wyckoff standpoint, we could draw the line for these reactionary lows. Right? We could draw the market from this reactionary high, or the one the market sold off from, right? So we see a market that essentially breaks on Friday, to kind of set this up for tonight, right? Breaks low end, breaks low end, breaks low end, okay? So we don't see any bounce in the support. This is the gap lower today, okay? That's kind of the behavior of that today. I'm not going to bore you with doing this, setting this up, right? Okay. I do want to be at a point to where put some things up here, though. Okay. So we have gold. Interesting. Those who get the newsletter, we've had this pegged pretty well as far as the gold wise, daily wise. Now we see something very interesting in gold. So I mentioned that we have these little springboards, right, that occur in the middle, right, and these little retests that get demand from lower levels. Okay? So, what do we see? We see the market forming some type of up move here. And then we see a market that has these previous lows here. So we mark clustered lows or reactionary lows. And then we see a market that has a spring of these previous lows and then higher. Okay? I mentioned in the newsletter several times that was a what? That is a hinge or springboard to the market. Okay? A spring of the market on this little right-hand side of this training range is what we consider a springboard of the market, which led to markup. Okay? You see that? We then have a reaction height and up thrust in markets that are tending to be bullish are probes to go higher. Up thrust to the market, spring to go higher, and then the market retests the area of the market retest. So resistance now becomes support in the market. Okay? And we get the break that comes in, and the market goes lower. The reason for the break is to knock out some longs. We now get a situation. Market breaks, the volume is pretty high, and the market rallies and close high. Now, the bar on Friday almost would appear to be shorting a thrust, basically to be at a point to where it was stopping action. Okay? But real in reality, what it was a market that was kind of absorbing any selling from this particular selling bar. So any selling that they resold the market here to try to defend resistance was actually being bought, which was a positive event to the market. Okay, so kind of maybe a fine line between those two. But in this case, the higher end close, high volume, was absorption of any selling that was occurring in the market. Okay? If I now take a 60-minute chart of this, okay, well, I'll say 240 is even better. 240, you will see that the market has a spring, and the market takes out this resistance, stays higher end, upper end of the range, the creek with no selling, and boom. Okay? If I go back here, something very interesting is that the market runs up and immediately gets selling in the market. Volume increases. The volume increases. And the range is wider, and the close is in the middle, indicating obviously some selling high level. What would cause that selling? Well, maybe the price got too high relative to where the market, where the CM thought the price kind of should be. So, market sells off. We know that the market was defended in this area because volume picked up, and the market closed lower mid-range to the market. Okay. So, market goes up, comes back down again. We want to see the volume. The volume comes in. Why? Because the market made a new high. We get a bunch of buy stops that came into the market. Market then rallies up again, sells off, the volume comes in. This increasing of volume is the demand that's coming into the market. I mean, supply coming to the market, where the CM is defending. Where the CM is defending the resistance area. Okay? It's defending the resistance area. So we have a total of 1, 2, 3 selling tails to the market. Okay, we have 3 selling tails to the market, indicating that the composite operator is defending the resistance area. Okay? Then the market forms, this is very important, market then forms some type of trade range. We break that down, and the market then breaks to where? The market will go down to where the market is going to find demand in the market. Okay? The demand comes to this area right here. This is a perfect retest of an area that is buying. Okay? So, when the market has previous demand support consistent, if the CM is willing to buy the market here, right, then the market then gets to the point to where the CM defended the market again, it was higher. No selling here, higher. So here's the difference. When we get to this area here, we start to see the selling tails that occurred in the market. Okay, start to see the selling tails that occurred in the market. Okay, when we got to here, there were really no selling tails. The market just was a little lower, and then the market actually stayed up near the creek area without the resistance coming into the market. Okay, so this is absorption of the right-hand side of the selling that occurred previously. This then market then marked up tonight, the upside. So the difference is that here you get the selling tails, indicating the market maybe was overbought, overextended, or too overpriced, and the market broke back down. It broke down to find the demand level of the chart. Okay, and this would led to today's rally, the market, tonight's rally, the market. Silver, interesting, is even more of a classical situation on a 240-minute chart. This is really the one you should really important aspect. So this market had selling, which was you lower. Then you got a reaction back here. We market retest. Now we form some type of range. Market then has a spring. Then suppose you don't really realize the market, you're not sure what the market's doing. The next two bars are pretty obvious. These are buying tails to the market. Market that went down to the lows and closed high end. That's classical absorption to the market. And the market then marked up tonight. But you can see the high end close to the market and the buying tails of the market. That is absorption, which will have to mark up today. Okay. Let's Any question this chart? Pretty good chart. Good. I don't know why this messed up the way it did, but it did so. NASDAQ. Daily chart's very interesting. This is a pretty clear-cut example of why we're lower tonight. So we have a market that basically high-end closes option, and we mark this bar across. Look at this bar right here. You'll see the market has that volume to the market. Okay. Friday, we have a market that has much smaller range, but the volume is only slightly lower. And the range is much smaller. The smaller range volume very similar to the market. Indicates effort versus result. Indicates that the buying that the funds and specs would do, annual highs, is now being sold to them. What we can tell by the poor close, but it was effort versus result. It was the buying by the funds and specs that tried to have the market mark up, and the selling of the liquidity of the CM, market-wise. Okay, so it's pretty clear by the action, effort versus result, Mr. Bars. This was effort. This was effort result. Thus the market on. Okay. Let's see if we glean anything for the short-term chart. This is very typical of when you see a market that's going to be a little bit weak. So we have a nice jump over the creek here. Remember, this up thrust probe is higher. It's a probe to go higher. Okay. Selling. Market go up, selling. So the market really got truncated. Okay. Then the wide bar downside with increasing volume tells us selling that occurred in the market. So this was some type of spring or shakeout. The market would have gone up and made new highs to the market. What actually happened? The market actually formed a range, attempted rally, a range for the lower trade range from the selling, and now the market hit the mark down here. So the market had set up bearishness. Had the market run away from this area and gone back up into here, the market would have been absorption to go higher. The fact that the market formed a lower trading range in the market after selling meant that the market had to go lower before and find that support before possible reacting up higher to the market. Okay, very, very important. And this again has been a shakeout, would have gone up to new highs. Okay. Now, if you go back to here, this is really a nice example of vertical absorption where you jump over this resistance area and then you get this buying tail, no supply in the markets, and the market marks up. Okay, so it's a nice chart. Bonds. Bonds show something interesting too, right? The bonds we know have resistance here. This was a reactionary high in the bonds. Okay, a reactionary high in the bonds. So if the market's bullish, we mark up, and we either mark up or we absorb above the resistance area. Okay, we go above it, we get selling. Let's put the volume in here. Market then tries to have small ranges in the market. The volume decreases. And then what happens? Those who defended the market, okay, those who defended the market once again defend the market. And sell the market down. Okay? Now they didn't really come with supply. And the reason why they probably didn't come with supply is because the market did not make a new high. It did not attract buyers by the composite by the funds of specs because we did not make new highs. Okay? So without that really supply coming into the market, okay, the market probably will retest higher based on it. So without the supply coming into the market may try to absorb this selling and work up to go higher. Okay. We'll see what happens. The market, okay? Usually you get to see this if you can't make it out on a smaller time schedule than the daily. See if it comes in. Doesn't really. Okay. So let's just see if they do any absorption to the market as far as that's concerned. Okay. Crude oil. So with everything happening with the hurricane and so on and so forth, okay, crude oil was largely unaffected by it. Okay. Crude becomes when they have crude, they have heating oil and unleaded is the underlying byproduct of crude oil, right? So that they have a decent amount of crude oil. So you see, crude still reacts from some type of small train range, but the bioreaction is nothing really to show anything of interest, right? If we look at the reaction to a market like the unleaded gasoline, you can see that the hurricane caused a sharp increase in the market. What's interesting about the market is that when the market started going down here, instead of getting supply to the market actually had a spring of an area the market went up from. This we have a market that went above this resistance, right? Above this resistance. Again, having this particular up thrust of that particular high. Okay. And the key to this bar was the next bar. Next bar went higher, all close. This mid-range to low mid-range close indicated the market needed to have some type of retest. The retest back into this area, okay, it really wasn't too much. The retest was part of the LPS markup before the market began to mark up. So you can see the reaction of the unleaded gasoline relative to crude oil. Okay, as I said to you, a byproduct of this heating oil. So the products of unleaded gas and heating oil reacted. The crude did not react to it. Now we ended with some type of potential upthrust on the market today, right? Look how deep the market is today. As things begin to get a little bit more normal to the heating oil, under the gas. This is tonight's action. So pretty large move that happened, but now it's coming down pretty hard. And one thing about these, fundamental moves, and fundamental meaning with the hurricane down in Texas. One of the things we know about these fundamental moves, okay, is that the fact that the market was over with, markets are sharply the other way because they gone up with air and they went down the same particular way. Okay, so that's an important thing. So who knows? I think it's a very dangerous market to trade. Um, at that aspect of the trade wise, simply because you just don't know the what was damaged, what was damaged, and usually these things that happen, they have a tendency to correct themselves, and they have a tendency to go back to where they were. Okay, versus we have an abundance of stuff, and you know it's not something that it's a permanent thing, right? So that's the problem of trading fundamental things, is that as quickly as they go up, um, they easily, um, can come down pretty sharply. So be very, very conscientious of that, okay? As far as that goes. Okay. So this is the euro currency, and I think it's a pretty important chart that we go forward, right? So obviously, our dollars, U.S. dollar, goes up when interest rates go higher. Well, we saw the bond chart. Bonds have gone up, which means interest rates go lower. Okay? So the U.S. dollar has caught with lower interest rates means that the people come out of the U.S. dollar. Okay? This is the reason for it. Market goes higher, forms some type of stopping action to the highs, goes back down. Market attempts a spring. If you look at the volume of that particular spring, well, it's equal to what's going on. Friday was a move that tried to go higher from a positive close from the bar before. And what do we see? The market has some type of upthrust on the previous bar, an increase in volume. So the market's a little bit defensive. The market can come back down lower in the market and may lead to a retest back down to this area here. Let's see if we get 117.86 area. See if the market gets some type of spring of that behavior. Right? Let's see. Okay, those were the charts that I wanted to show tonight. Obviously it's a hot. Oh, wait, I will show you. Um, okay, so this is copper, and copper is a very interesting commodity, right? So copper is one of those markets that has some type of markup here, higher trade range markup. And the thing is, even though you have closes that are not great closes, the market came down in volume. But even though you have poor closes in a market that's bullish, okay? Yeah, maybe the market may correct, but without the supply coming into the market, low end closes could give you some type of correction, may not. But without supply, the market continues to go in the path of its resistance. In this case, it's up. Okay. Now, if we draw our lines, when we see markets vertical, we draw our lines across, we will see why the copper is struggling to mark up. It needs to go sideways to build more cost, so it'll go higher. But if you look at the market itself, and sometimes when a market reacts to the line, like this one is, it tells you that bullish. Now, it's interesting that you said that, Everett, about copper. Yeah, copper is usually a housing commodity, right? Using housing. But what's interesting about this is that copper, okay, but copper is used a lot by the Chinese. So it may be that the situation may be not here. In China. And maybe the market could be their strength, right, versus our strength. So we'll see. But it looks like the market may be at a point to where it's more China growing than the U.S., right? Because I think the U.S. basically has been relatively weak. You can tell that by U.S. dollar, right? Okay, so we'll see. But obviously, when a line works, a horizontal line works like that, it tells you that that line is a valid line. When it doesn't work, it's kind of like finding, you got to find the line that actually works, right? Well, when a line kind of comes off it, these are overbought lines, so they're not really lines to sell in the market, right? They're not lines really to sell, but they're lines that indicate overbought. So market, we're leaving overbought line by going sideways to the market as that sloping line continues higher. Or it can keep butting ahead of it. Market keeps butting ahead against, okay? If the market still butts against the reverse trend line, okay, then if the market doesn't back away, overbought but strong. Overbought but strong. Okay? So that's what you see. A market overbought but remains very strong to the market. Okay? Remains very strong to the market. But it is a kind of metal. Okay. Any questions? Anything tonight? It's a holiday, so we're just going to do an hour tonight, which is probably an hour more than maybe a holiday. Maybe I could have done. I don't know. But I wanted to see if anything happened overnight or the weekend and be here for it because I think that's very important. So, okay. I want to wish everybody a good holiday. I want to wish everybody tomorrow, Labor Day, and the markets. I will not be in the office tomorrow, and the markets will be opening. Regular market, like grain stuff, opening tomorrow night. Markets will close early this morning when Europe closes, like 10:30 Chicago time, 11:30 East Coast. They will trade for a few hours overnight and trade for a few hours in the morning. So if you need to, currency wise, you may not see anything, but you may see something, moving wise with the S&P. Who knows? Okay. Okay. I want to wish everybody a good evening. God bless, and hopefully see you on Tuesday night for the Wyckoff Gold and Silver member thing. Good holiday, everybody. Thank you, David, and we'll talk to you soon, guys.